What's up, money growers? Jacob back here with another video coming to you guys today, talking about something that's going to be very important to a lot of you, especially if you've had bad credit issues in the past, you've had lots of challenges with your credit, or if you're just trying to build your credit, okay? Maybe you're brand new to this whole credit journey, you're trying to improve your score, and the info seems kind of overwhelming. We're going to be talking about something today called the Self-Credit Builder Account, all right? So self, or a lot of people call it self-lender. Been around for a long time, okay? There's a way for people to build their credit, and we're going to be talking about some of the options they have for you. We're going to be talking about the Credit Builder Account mostly today. We'll talk a little bit about the Visa card they have at the end, but we're going to talk about who is eligible, how this whole system works, what is it about secured loans and all that kind of stuff. So we're going to dive into that. So go ahead and hit the thumbs up button for this video. I do want to say thank you to everybody who has been in the comment section, particularly like Corey and some of you that have been helping a lot of other people out answering their questions. You guys are doing an awesome job of helping out other people. I'm happy to see that. And I appreciate you guys taking some time to help each other because, there's a lot to know in the world of finance, and just credit by itself can be pretty confusing. So thank you for helping each other out. Now let's go ahead and hop into the video here. Now, self lender, right? Whatever you want to call it. So self credit builder account. Okay. Now, if you didn't know, 35% of your credit score comes from your payment history. Okay. That's a big chunk. All right. That's over a third. Yeah, over a third. So the whole thing with the credit builder account is that it helps you build positive payment history. Now, looking at who should apply. Now, you can apply if you even have a really good credit score, you can apply for this. But if you have a low credit score, that's who this is geared towards, right? If you have low credit score, poor credit score, they just want to raise it. So, say your FICO, right, shows you're 580 or below, you're 590, whatever. If you got a 690, if you got a 720, you can apply for this. But people who are in those lower ranges are oftentimes the ones who want to apply. Even if you had like a bankruptcy or something, as long as you haven't had any like major fraud or anything like that, that's what this is really for, right? The credit builder account. Now, if you've got no credit history, then a credit builder loan can help you establish credit history with the 3 leading credit bureaus being Experian, Equifax, and TransUnion, right? So how to join Self. Okay, these are the requirements you have to know. Now, you have to be at least 18 years old. You do have to be a U.S. citizen or a permanent resident, okay? And this is available in all 50 states, so from Vermont to California to Florida to Washington, everywhere in between, okay? Now, you do have to have a social security number for this. You have to have a bank account, debit card, or prepaid card. Now, you can't have had a negative check system report, such as a bounced check or unpaid fees, in the previous 180 days. So for the previous 6 months is what you're looking at. Now, when it comes to how credit builder loans work, okay, so this part is a little dense, but we're going to break it down step by step. So you're going to apply for a credit builder loan at a bank or credit union or through Self, okay? This is how they work in general. Now, this type of loan is called a shared secured loan, okay? Because it's secured by your savings account that has your own money in it. So it's your money, okay? That's the difference between a secured loan, a secured credit card is you have to put up the money first to secure it, to make it, so the bank, the credit union, whatever, they have something in the account, versus unsecured, where they give you a credit card, they let you use their money, and then you basically promise to pay them back. With a secured loan, a secured credit card, you put the money up front first. Now, once your application has been approved, you're going to get the loan proceeds you're approved for moved into a separate account, usually a savings account or a CD account, okay? Now, the loan amount can be, a few $100s to $1,000 plus. It really just depends, okay, on whatever institution you're at, whatever they offer. Now, you're going to start making your monthly payments for the predetermined amount of time. It could be 6 months, it could be a couple years or longer, okay? Just that's the length of the loan term, all right? Again, just depends on where you're at and what they offer. Now, the bank, the credit union, what they're going to do is they're going to report your monthly payment activity to one or more of the 3 major credit bureaus. So again, TransUnion, Experian, and Equifax. Now, the credit bureaus, they're going to generate a credit rating, also known as a credit score, based on your history of using credit. FYI, they're not all going to be the same score. Okay, there's probably going to be some variety, some variance in your credit score between the different bureaus. But nonetheless, this is going to help you build your credit score with them. Now, when the loan balance reaches 0, the bank, the credit union, whoever it is, they're going to unlock the CD or the savings account, and they're going to return the money, the total amount of money, minus any fees or minus any interest or stuff like that, because they got to make some money from it. So they collect some fees, they collect some interest in exchange for you being able to build up your credit. Now, what is a credit builder loan? Okay, this loan exists. It's an installment loan that exists for the purpose of helping you build positive credit history. Okay, that's really what it's for. That's the demographic that it targets. Now, the difference between the credit builder loan and a traditional loan is that you don't get the money until you finish making every loan payment. So like you said just a moment ago, once you finish paying that loan off, you get all your money back minus any fees or any interest you've paid. Now with Self, they have 4 credit builder loans that they do, okay? Small, medium, large, and extra large. So when you're looking at it, if you're gonna go with the small one, and I'll break down the math here. This is a fair amount of numbers to look at, but I'll do my best to simplify it. So here's the small one that they have, okay? It's $25 a month for 24 months, all right? So for 2 years, you're gonna pay $25 every month. 25 times 24 is $600. That's the total you're paying. There's an administrative fee of $9 they do with every loan. So you're paying a total of $609. Now at the end of it, you're going to get back $520. And the final cost to you is going to be $89. So the admin fee plus the total is $609. So you're going to get back $520 and you paid $89. So $520 plus $89 is the $609 you see right here. That's how the math adds up, okay? Now the interest rate, 14.14%. The APR, 15.92%. Now, as we look at the medium builder, okay, it's $35 a month for 24 months, admin fee of $9. Total will be $840 you're going to pay. You're going to get back $724. The final cost is going to be $125. Interest rate 14.7%, APR 15.97. So same process, same concept, still 24 months, but you're just putting up more money every single month. Now, as we move on to the large builder, it's $48 a month, but only for 12 months. So it cuts that time in half. So if you want to do it quicker and you really want to put up some more money each month, you can cut the time in half. $9 admin fee. Total is going to be $576. You're going to get back $539. The final cost is going to be $46. So again, you can do it quicker, right? You can do it even a bit cheaper if you're willing to do it like this. Interest rate 12.44%, APR 15.65%. All right. Now, as we move on to the extra large, so the extra large builder, again, 12 months. So 2 of these are for 2 years. 2 of these are for just 1 year. Now, the shorter the time frame, the more options you have. I mean, if you're going to be paying more up front, then the shorter the time frame you can do for that option. Now, you're going to pay $150 a month for 12 months. It's going to be a total of $1,800 plus that $9 admin fee. So you're going to get back, though, at the end of the 12 months, $1,663. Your final cost is $146. Interest rate, almost 15%, right? 14.87. And the APR, 15.91, so almost 16%. But you do have 2 options for 2 years, and you have 2 options for 12 months that you can do with Self. Now, things to keep in mind, some of the benefits and why people like Self is because, they can just sign up online. Okay, you can do this online on their app, right? So there's a convenience factor to it. And it's available in all 50 states. So if you live in Oklahoma, Texas, California, Alaska, Hawaii, wherever, you can do this. It's available to you. Now, it also builds your payment history and credit, right? So Self helps establish your payment history, which also helps in building your credit, okay? Now, this is the last part where they offer the path to their secured credit card, the Self Visa credit card. So a Self credit builder account can help you get access to the Self Visa credit card after 3 months with no hard pull on your credit. So the credit card will also have no hard pull on your credit, but you have to have had the Self builder account, making your payments on time and all that kind of stuff for at least 3 months. So basically you have to get the first product, the Self builder account, and then you can get the next product, the Self Visa credit card. So that's how they have their business model set up, right? Obviously it helps them. It's an upsell for them. So, this helps them sell more of the credit builder accounts because some people want to get the Self Visa credit card and that kind of thing. So, for them, business model, hey, not a bad idea for a business model so people can get 2 positive trade lines reporting to build up their credit score. So Self offers both of these, but you have to get the credit builder account before you can get the credit card. And go ahead and subscribe if you haven't done so yet. So this should have been a pretty good rundown of Self for you. There might have been some stuff I missed. If I did, put it down in the comment section below. Again, I appreciate you guys helping each other out down there. You guys are awesome for doing all that. So if you haven't subscribed, please do so. I appreciate you being here. That's going to be it for this video. And until I see you next time, keep growing your money.